Greetings traders, my name is Timothy Hellberg. I've been trading for around 12 years now, and today I'm bringing you a market report for week number 18 of 2022 in collaboration with IMGFX, the people's broker. So let's jump right into it. Before we do, let me just point out to you guys, you can pause the video right here if you want to read a disclaimer, but easily said, you should not trade on what someone else is saying. This is not a recommendation to buy or sell anything. It's simply my take on the markets, giving you an insight into my reasoning and what I think is going to happen, what is worth noting, etc. You should always do your own research and just use this information to grow your knowledge base, basically. So, looking at the agenda for today, what we will run through is as always, we will run through the economical calendar and events for next week that we should look for. We'll talk a little bit about market sentiment, what the current sentiment is and potential shifts to look for. We'll talk about last week's calls, where capital preservation was the name of the game. We'll talk a little bit about Bitcoin, where we have some nervous price action and prices are getting into a very interesting point. We'll talk about gold, where key levels have been taken out, but we should take a look at gold against the euro instead of gold against the dollar. We'll also talk a little about euro dollar, where we talked about parity a couple of weeks ago. Well, the chart is looking nasty. We will also talk about silver, that might be a harder play than gold, and we'll finish things off by talking about the Australian dollar against the US dollar getting back to its original correlation, mainly due to China earnings and risk sentiment. So, before we do, if you're new to the channel, leave a follow. If you like these kind of content videos, then hit the like button. We would love to see some engagement. If you have something that you want me to run through in the next week's market update, you can leave a comment and I will definitely take a look at it. If you have any questions or anything, leave it in the comment and we'll interact with you guys. So with that said, let's jump right into the economical calendar. So, looking at the economical calendar for next week, we are starting the week a little bit slower with basically only the ISM from United States being interesting. Once again, this is a good inflation reading, so as we have spoken about many times now, the market is all about inflation, so for that reason keep an eye out for this ISM manufacturing PMI number. Tuesday, early morning, if you're in Europe or the UK, we'll look at the cash rate and the rate statement from the Australian dollar, which is basically their interest rate decision, which is one, if not the biggest data event that you have for a currency, so this is definitely worth taking a look at. We are expecting an increase in the cash rate, so keep an eye out for that. Keep an eye out on the rate statement, especially if you're going to trade Australian dollar based on what we will talk about later in the day today. Jolt's job openings, not a huge one, even though it's red marked on the calendar. I would not pay too much attention to that one. Then Wednesday, we are in the middle of the night European time. We have employment change and unemployment rate for the New Zealand dollar, which can be a big one if it deviates a lot from the expected figure, but the market isn't that focused on employment right now, so it's more focused on inflation readings. So from that point of view, I wouldn't spend too much time on this one unless you have exposure in the Kiwi. Then we have ADP, which is a good preview for the upcoming non-farm payroll figure from the United States. So ADP definitely worth keeping an eye out for. If this deviates a lot from the expected, it can move the markets. Then later that evening we have the FOMC statement with the rate decision from the United States, where we once again are expecting a hike from the Fed. And as always, as I just mentioned with Australia, interest rate decisions are the biggest ones for currencies. Any deviation from the expected can move the market heavily, and we also have a statement that we've spoken about before with the dot plot, and we also have a press conference. So big one. You need to keep an eye out on your risk exposure heading into this kind of news, because it will move the markets, and it can move the markets so heavily that it actually spills over into other currencies. So it doesn't have to be dollar exposed. It can be something that is exposed to risk or have a indirect correlation to the dollar. So big one, definitely something to bring out the popcorns for and keep an eye out for, looking at the fireworks, so to say. And on Thursday, we have the bank rate for the Great British pound, so things are really starting to heat up now for the week. We have huge news coming out for many currencies. Once again, interest rate decision, one of the biggest news you can get for a currency, definitely worth keeping an eye out for. We are expecting a hike, and just as we do with the United States FOMC, we are watching any kind of comments, any kind of statements, any kind of rate hikes, any kind of deviations, any kind of deviations in the votes. Everything is interesting in this report, especially if you have pound exposure. And then we end off the week with huge fireworks. Pretty much we have unemployment from Canada at the same time as we are getting the NFP, the non-farm payroll release for the US dollar. So we've spoken about this before. This is not just a straight line trading event. You don't just trade it on one headline deviating. The more of these headlines that are missing or beating expectations, the bigger the move you get. The less they deviate, the more focus will be on the non-farm employment change figure. So yeah, big week in terms of volatility, so definitely something that you need to keep an eye out for if you have exposure in the markets. So next up, market sentiment. As you know, we like to take a look at the VIX. So if we take a look at the VIX right now, I've spoken before about the VIX moving higher, and we've seen volatility picking up just over a 30 level right now, which is significant. Basically, the risk sentiment right now is poor. The market is nervous. The market is not liking the current sentiment. It's not liking what it's seeing in terms of the equity markets, in terms of China going bad, in terms of COVID blossoming up around in China. Not liking what it's seeing with Russia, Ukraine, not liking what it's seeing in terms of commodity prices, in terms of inflation, in terms of stagflation. You know, I can continue for how long you want, but there's just too much to be worried about right now, just to sum it up in the financial markets. So you are seeing you are seeing volatility go up, you are seeing equity markets going down. So you are seeing the US dollar as a safe haven having a mad run. So yeah, risk sentiment is poor. It's something that we will see in crypto also. That is a good risk barometer. But what can shift this? Well, the obvious things, you know, any signs that economies are being able to manage inflation, but no, we are not there. We will not see those signs now. Any indication about the Russia-Ukraine crisis, the Russia-Ukraine war, I should say, you know, subsiding, we won't see. I'm sorry, I don't see a world where we will see that. Russia won't just, you know, after all of this, they won't just withdraw their troops and then leave everything. No, this conflict will go on for some time, and it will affect Europe in terms of price on energy, etc. So there's just too much going on for the market to be happy right now. So potential shifts to look for, well, I don't really see anyone, so I would expect the market sentiment to continue being bad, unfortunately. If we take a look at last week's calls, we talked a little bit about our NCD, for example. We talked a little bit about gold, but I'm not going to run through it because nothing triggered. So we were looking for our NCD to move back down. We were looking for some other setups that just never got into the positions that we were looking for. So when it comes to that, you just need to sit on your hands, and the name of the game is capital preservation. You don't want to risk your capital in a market where you don't have the setups that you are looking for. I mean, you just think of it. why would you risk your funds in a trade that hasn't met your criteria of why you want to take the trade? So there isn't much to run through from last week's calls because nothing triggered. So and it is like that sometimes. You just have to be very, very, very disciplined and not over trade in those kind of markets, and just accept that the setups that you were looking for in the market, they did not fulfill this time, and that's fine. The market is open. In terms of FX, the market is open 5 days a week, every single week, so you can just get back. New trades will come. You will just get back to trading when the time is right. So, looking at this week, let's jump into the BTC chart, Bitcoin against the US dollar. So, we have some nervous price action right here because we are coming down into the very, very lower regions of this support area. With the current risk sentiment that we are seeing in the markets, I'm starting to get very doubtful on the BTC chart. Unless we see a major shift in the risk sentiment, then this is a selling rallies market. Any kind of bullish pullback we see in Bitcoin, I would sell that. Now we are moving into a large support area. Of course, that's important to keep in mind. But if we break through this, that's literally like someone just pulling the rug from underneath the feet of Bitcoin. So this could really accelerate fast to the downside. So if you have Bitcoin exposure, or more importantly, if you have exposure in altcoins, so basically coins that are effectively just moving as a leveraged version of Bitcoin, you need to check your risk heading into these lower regions, because things can get ugly very fast if this breaks and moves lower. And that's kind of the trade that I want to be in right now also. I have a hard time seeing Bitcoin just popping up to the upper region. So from that point of view, I'm starting to shift against the sell. Now the sell is a bit premature right here, but you need to keep an eye out on these levels, because if it breaks, it can get going fast. Now that brings us over to gold also, because if we take a look at gold, I've been talking about being long gold for quite some time, and we broke through my levels. My latest trade got stopped out for quite a hefty loss there, as we just peaked below the lower region. Now then the next level that we have is this blue line right here at 1880, but even though we haven't had a daily close below it, we still broke below it and peaked back up. So could this be that we are just seeing a larger consolidation pattern forming? Might very well be. I mean, who really knows? But I'm not loving long in gold against US dollar right now. But that doesn't necessarily have to do with gold. That has more to do with the dollar, because even though you trade gold in the dollar, I mean gold is valuated in dollar, you can still take a look at the gold against the euro. And if we take a look at that, we've seen a much more bullish price action over the last few weeks. So what that tells us is that the price action that we are currently seeing in gold, that doesn't really come from gold's value. It's coming from the US dollar, because if we take a look at the US dollar index, the dollar has just increased in value so exponentially that it's insane. So that of course is bringing down the value of gold. So with that said, even though I'll still like gold from a fundamental perspective, it's not really tradable with how the US dollar is moving at the moment, and I don't really see the US dollar changing its move at this point in time. I'm not in the business of trying to pick tops and bottoms, because if you do, you won't be a very successful trader. So I'm not going to say that the dollar, I don't see any reason why the dollar would make any significant pullback at this point in time. So I'm in a wait and see mode for gold, but I might have a better play coming up than actual gold, even though it's strongly correlated to it. But first, before we take a look at that, let's take a look at the euro dollar. So the euro dollar. A couple of reports ago, I spoke about euro dollar going down to parity. Now you see we're broken below the major support levels. We've taken out all of these major support levels. We have more than what you are seeing here. We completely ignored the bullish divergence on the daily chart. So this is what I'm talking about in Bitcoin too. When we took out this low, things just got ugly, and the dollar is moving so strong that everything is getting affected. And in terms of the euro is the big loser in terms of the current risk that I was talking about. You know, you have the Russia-Ukraine war, you have the issue with energy prices going up so much in Europe, you have the issue with as I spoke about last week, with the ECB, the European Central Bank, having to try to manage inflation that is going rampant, but it doesn't just have one country that it's covering, it has all of these countries in the Eurozone. So, you know, a country like the United States or Australia or whatever, they have these issues that are hard for the central banks to manage just for one economy. Now the Eurozone has to make policy decisions for several countries, which is really making this hard to manage, and they are not doing a great job so far. So the euro is just a big macro loser, as we are seeing right now, especially with the US dollar being such a big winner, being the reserve currency that it is. So, you know, this is a sell rallies market right now unless something big changes. So, you know, I'm going to trade euro dollar in a way where I go on a lower time frame. I will look for bearish signals. For me, I like to look for divergence in either the RSI or the MACD, and I'm looking for bearish divergence on the lower time frames that can get me into trades, and I will try to trade this to the downside. Will we see parity in the upcoming week? Not sure. I'm not sure we would see it move that aggressively, but you never know. But I would be very careful trying to pick a bottom in euro dollar and just trying to buy this. Don't try and catch a falling knife, guys. Next up, the play that might be more interesting than gold, looking at silver. So silver is of course correlated to gold, but it's a higher beta move than gold. So if we're looking at silver, we are coming into this pretty major support level down here. We're not quite there yet, so I wouldn't be pulling triggers on the long trades quite yet, unless you're looking to build up a portfolio of many long trades. But this could be hinting to what I said, that the actual gold dollar chart is not exactly what we are looking for. So this can be interesting. The long trade isn't there yet, but it's definitely worth keeping an eye out for. And once again, you have dollar risk to this trade also, with the dollar moving strongly. But I think if we get a pullback in the dollar, I think the long trade will be more profitable and more fruitful in silver than it is in gold at this point in time. So a short-term pullback, long trade in any of the precious metals, I think silver is the play. Let's end off looking at Australian dollar against the US dollar. So earlier this year, the Australian dollar had a very different correlation than what it's used to. It had a correlation more to commodities and the high need for commodities with this big bull run here. And usually Australian dollar is more correlated to risk, and more specifically the equity markets. So with what we are seeing now is that it's getting back to that correlation. And why are we seeing that? Well, because Australia, they export a lot of goods. Their main exports are going, almost all of their exports are going to China. China is cutting rates. China is having economical issues. From that point of view, you can expect them to import less goods, which is bad for the Australian dollar. At the same time, you have equity markets, so the stock markets in the United States and all over the world pulling back, which once again brings that risk correlation in the Australian dollar back, which is bad for the Australian dollar. And we have the general risk sentiment that is turning poo-poo with the Australian dollar going bad. So putting all of this together and then matching that against the strong price action in the US dollar, I mean, do you wanna buy something against this? No, of course you don't. You want to sell something against this, and therefore you have the Australian dollar, which could be a very good play. What can change it? What can make the Australian dollar move back up? Well, if equity markets turn around, if risk sentiment gets better. But as I've said many times in this report, I don't see it happening in the very near future. So from that point of view, I think this is a sell rallies market. So as I've spoken about in the other currency pairs, I would go on lower time frames. Me personally, I like to look for divergence in either MACD or RSI. Bearish divergence in this case that can get me into bearish trades, and I would aim obviously for these low levels right here, trying to take more short-term trades, because yeah, it's pretty oversold, but that doesn't mean it can't go lower. But I would be very careful trying to pick a bottom in the Aussie at this point in time, especially against the US dollar. If you want to pick a bottom in the Aussie, I would do it against another currency, like for example the euro. So that's it for this time. If you enjoyed this, leave a like. It would be highly appreciated. Follow the channel. Leave a comment if you have something that you want me to talk about in the next video. Until then, I hope you all have a profitable week, and I hope we make some money and some pips together. Have a good one, guys. Bye bye.